Welcome to Looking at the Markets with David Modell. I want to talk to you about what do you do if you're down on your position. Maybe you bought cryptocurrencies, maybe you bought Bitcoin and it went down, maybe you bought whatever. It could be any kind of stock or commodity and it went down. Yeah, I coach a lot of people, and oftentimes people come to me when they're down on their position. And that's okay. I would prefer that you come to me before you get far down on your positions. Okay, that way you can prevent that kind of thing and avoid it. But hey, if you are down on your positions and you want to come to me for coaching, you can email me, davidmodell@gmail.com. And I could talk to you one-on-one just like this, all right? But just generally speaking, you're down on your position. What you don't want to do is get emotional. I'm going to ask you first, did you have a plan in place? For example, did you have a stop-loss order? If you're coming to me for coaching because you're down on your position, then there's a pretty good chance you didn't have a particular stop-loss order in mind, or a plan not to use a stop-loss order, because you don't have to use one. You can just ride it out. But this all depends on your time frame, your risk tolerance, and your account size. All right, so let's talk about those things. You're way down on your position, whether it's Bitcoin, whether it's stocks, whatever it is. Maybe you're 20% down, maybe you're 50% down or more, okay? I'm guessing you didn't have a plan in place if you're worried about it right now. So you're going to have to divorce yourself from your emotions. You're going to have to separate yourself from that and look at it analytically, which is easier for me to do than you because it's your money. Okay, I get that. But still, you have to avoid getting emotional because you're going to make the wrong decision if you do that. All right, so you look at it logically, maybe even step away from your phone or the computer or whatever it is just momentarily, just to collect your thoughts, and then come back to it when you've calmed down a little bit. Okay, that can help a lot, help you think a little bit more clearly. Then you want to decide what your time frame, your time horizon is. Are you a long-term position trader, as they call it, where you're willing to wait years for the trade to work itself out? If so, then what are you worried about? Okay. Now, a lot of people say that they're a long-term investor, but they don't really mean it. Okay. They say that, and then they buy a stock or whatever, and then it goes down 20, 30, 40, 50%. And they realize, okay, you know what? Maybe I was never really long-term. Maybe I was really, really hoping that it would go up within a few days or weeks. Okay, so the market is going to test you to see if you really are a long-term position trader or investor. It's going to test you. You're going to find out the hard way whether you're serious about staying in there for the long term, for years. So are you a long-term investor? If you are, then be a long-term investor. Be that. If you're really committed to that, to hang in there for the long haul, then be that. Then you probably might not even need a stop loss. If you're in there for years, then a stop loss is just going to take you out within a few weeks or months. And you're not going to be able to let the trade or the investment work itself out over years and come back up over time. All right. Now, on the other hand, if you're a swing trader, meaning that you hold on to your position for days, weeks, maybe a couple months, then you have a decision to make, all right? And it's a decision you should have made before your loss, but now you have a loss. What are you going to do? And by the way, if you're a day trader, intra-day trader, meaning that you buy and sell within the same day, then you're probably not going to come to me with that question, because you're probably not going to have a position that goes down 20, 30, 40, 50% if you're just scalping it. Scalping meaning you buy and then sell very quickly afterwards. All right. If you're a true day trader or intraday trader, then you're going to cut your loss by the end of the trading day, no matter what. So you're not likely to get that huge of a loss. So if you're a day trader, this probably won't apply to you, but it still can, because if you're a day trader, you probably want to have some sort of stop loss in place, or at least some plan to get you the heck out of the trade if it goes down that badly, and you might have to re-examine what your plan is for when the day trade goes against you. All right, but for swing traders who are somewhere in between day trading and long-term investing, okay, what are you going to do? Well, you're down substantially on your position. Now you have to decide, first of all, your time frame. Are you willing to wait it out for a few months or maybe even a year? If yes, if you're committed to that, then commit to it. Decide, okay, I really love this company. I did my research on it. I did my due diligence. I'm willing to wait it out. Okay, then commit to that. All right. If not, then what's your stop loss? You might have to put in your stop loss retroactively, meaning after you already have been in the trade for a while, which is not wonderful to have to be in that position. And next time, learn your lesson for next time. If you're going to have a stop loss, put it in place right when you make the trade or immediately afterwards. Okay? And so now you have to retrofit a stop loss onto a position that's way down already, if you even want to. So now you have to look at your account size. Can you afford to lose more money in your account? If not, then you may have to just cut your loss. You're in a very uncomfortable position, all right? And just learn your lesson for next time. If you cannot afford to lose more money, then you have to get out because you cannot afford for it to go down more, and it could. The market can always take your stock or crypto or whatever down more. It's always possible. Even if it's down 50%, could take it down more. So you have to look at your account size and what you can afford. And for next time, have a stop loss in place beforehand if you're going to use one. Know what it is, okay? Also know your profit target in case the stock goes up, and then you can get out with a profit. You know where and how to get out with a profit with a limit order or whatever, or a trailing stop or whatever it is. And then for next time, learn your lesson that a stock can go down substantially, and so don't invest or trade money that you cannot afford to lose. Simple as that. That's a rule that cannot be broken. You cannot break that rule. Please don't. All right, so if you're down a lot and you cannot afford to lose any more money, then you probably have to just get the heck out and learn your lesson and take your lumps. Now, what if you can afford to lose more money? You're down a lot. You decided you're a swing trader. You're willing to wait a little bit longer, but not like a year or multiple years. Okay, so then you have a decision to make. Are you going to retrofit a stop loss below where it is now at the point where you just can't take any more loss, or you're just going to ride it out? Well, if you've done your research and your due diligence on this company, which I hope you're doing for every stock you invest in or whatever you're investing in, and if you love that company and you believe it's oversold and it's just down too much, then you can hang in there. If you love the company and you have time to spare, okay? If you can hang in there for a few more weeks or months, you can do that if you're ready to do that. If not, then if you're not ready to ride it out, then you may just want to cut your loss and learn your lesson. So whether you stay in there depends on your time frame. How much more time are you willing to spend with this stock? How much more loss can you take and can you afford, both emotionally and financially? And what kind of trader are you? What is your time horizon, generally speaking? Okay. For next time, just decide these things beforehand. Your time horizon, what kind of trader are you? Are you going to use a stop loss or just ride it out? And how much do you really believe in this company? If you don't love the company and you don't believe it has a future, despite the capital loss that happens sometimes, if you're not believing in the company, then you shouldn't have bought it in the first place. All right? Unless maybe it's a really quick day trade and you don't care about the company, you're just looking at the chart and the price action, maybe. But for most traders, you want to research the heck out of the company before you even consider buying it. All right? So, yeah, there are a lot of if-thens in there, okay? But you have to decide what applies to you and decide whether you want and need to cut your losses. But either way, please learn a lesson for next time. And I'm sorry you're in this position if you are. If you have a big loss, I'm so sorry. It's no fun. And I know that it's easy to make rash decisions. So just stay calm, look at it analytically. And if you need more help, you can email me, davidmodell@gmail.com. I coach people on these things. And I help people to assess their situations because I'm not emotional like you are probably, because it's your money and I can just look at it from a third-party perspective, objectively. Okay, so if you like this video, if it helped you in any way or at least got you thinking about what to do and what not to do for next time, then please give this a thumbs up on YouTube and leave a comment. Let me know what you think, and also subscribe to my YouTube channel and hit that notification bell so you can get updates whenever I put out more videos like this one. Thank you so much. I appreciate it. I'll talk to you again soon.